right. Good evening, everybody. Let's do a brief sound and visual check. How's everybody's Monday? Start of the trading week. If you have not traded yet, audio sounds good. Great. Let me get a few things set up on my end, and then we can get going. Give me just a moment. I think that's the right one. Okay, perfect. Well, welcome everybody. Welcome to Slow Markets. As always, I'm Coach Dakota, Coach DBA, and there is our Topstep risk disclosure in the YouTube chat. This is for educational purposes only. Do not fall. I mean, yeah, we all have our own will. Look what happened to everybody who was fading the house account today. Didn't end pretty well, right? Big shout out to the house account today. Felt good to watch it. Felt good today. This start off during fast markets and then finishing it off with an amazing trade during power hour. So big shout out and kudos to Mohammed and the team. Coach Jay. But yeah, let's just get into it. Typically, we'll go through our regular rapid fire. We'll take a look at the NASDAQ, which you guys can see here on the daily. Then we'll take a look at crude oil, the Nikkei, and then gold right around 8 p.m. So let's just get started. Here's a daily chart. On the NASDAQ, what a day in the markets. We sold off. We got down to 20,050, 60, and immediately rejected right back up. And so take a look at this as we start to zoom in. Look at this. This was all resistance, and now this is becoming support. This is a interesting zone, and we could extend it. And so sure enough, the dip got bought. We rallied all the way back up. We're right back up to 240s, 250s. And this is a bullish candle. This is as bullish as a candle can get, I feel. Like we're right at this area. And so the question is, do we see continuation? Do we see a move back up, break above the high of the today's candle or yesterday's candle at 280? 280 is that big level, that level that we were looking at last night. So let's zoom in and let's see what we can see. Okay, hourly chart. So here we are. Here we go. You can see we've been basically going up and to the right slowly but surely, chopping up. And we did break out. If we zoom in, we broke through these highs or this resistance. You can see it very clearly. I mean, it's choppy. It's a zone, right? We were consolidating. This was becoming resistance. Immediately sell off, and then following that, what was this? 200 points, a 200-point rally during power hour. Basically, the last couple hours of the day, we held. So that was very good to see, where this was resistance became support, and we're holding above this zone. The next one is going to be this one I was talking about last night. 280s. Can we break up and come back up and test these 280s? And then look for a breakout trade to the north side. And the next level that I'm going to be seeing is around 380s, 370s. And so that's what I'm looking at going into tonight and tomorrow. A decent trade, I think, that I'm going to be watching for a slow markets trade is kind of something similar I had last night, where we could put a buy stop. So a buy stop above this zone as a resistance. Now this is a breakout trade, saying if the market does come up and touch this level, then it will trigger me into a long, some take profits up here near the maybe 350s, 380s, and then the stop loss down below the previous pivot right around, say, 208. So this is an overnight trading concept. I'm going to talk about more once we finish doing the rapid fire. We'll see if we could set a trade up for educational purposes, right? Like if you guys, I don't mind you guys following along in a demo account, practicing the mechanics, but definitely not used as trading advice. So that being said, I'm going to cancel this. Let's see what else is on the dock. Let's take a look at the 5-minute chart. Still looking really good. 5-minute chart is looking beautiful. Beautiful rally. followed by a pullback. That, this pullback looks like a Fibonacci level, to be honest. This pullback looks like a Fibonacci level. And take a look at this. A nice pullback. There's a nice little pivot right there. We came, we tested it, and now we're bouncing off of it. Is that pullback a Fibonacci level? I don't use Fibonacci's, but it sure as heck looking like one. Yeah, that's what I thought. Right around the 38. Right around, yeah, that's definitely a Fibonacci level. Doesn't matter how you draw it up, whether you're drawing it like there or drawing it like that. It's just a nice and very interesting area. And let's take a look. Man, this market is just looking beautiful. Yeah, this is a 5-minute chart. Yeah, I could see this. This is where we were at last night. This is major resistance. And if we extend it out, guess what? Resistance became resistance once again. Now the question is, do we go up there and test it? Can we break through that? Is this going to be a good trade to leave overnight? Some traders in the chat talking about Nikkei. So yeah, we'll continue to watch this. Let's move on. Let's take a look at Nikkei, since traders are talking about the Nikkei, and it is ripping. Nikkei is already past where we were last night. Last night's trade, I was actually short. It worked out really well, and we just broke above last night's high. And do we see this thing running? This is a 5-minute chart on the Nikkei. Yeah, I could see us maybe getting to this level right here, right around 38,865. There's some resistance around that. And then, you could go look, see, is this going to be resistance? The next other resistance that I would be watching is going to be right here around that 39. It's a 39,000. 39,000. That's a nice solid round number, psychological. And so, man, what a move. So I'm going to mark this out. Let's mark this level out. I want to see. I don't want to buy it here because we're just basically buying, trying to, the opposite of catching a falling knife, right? Trying to fade a solid, hard rally. What is the Nikkei? Nikkei. This is the Japanese market. You can see NKD is the ticker symbol. And it tends to be pretty volatile because it's the Asian session and the international markets are open. They are open right now. So let's watch this. I'm a little bit late to the party. What I'd like to see is a pullback. So maybe we could get some type of a pullback to, I don't know. Let's just watch it. Yeah, just sitting on our hands waiting, see if something can set up. But the move is underway. We'll see where it could go. I don't want to be selling this as we're starting to break out. Just watching, pay attention. Let's go back to the NASDAQ again, and we will, very similar to the NASDAQ, right? We are testing this little resistance that we've seen. Where did we open up? We opened up right. So the New York session, where did we close? Real quick. This is the NASDAQ. I want to take a look at something. So that was the close of the New York session. Basically right there. And then where did we open? We opened right down there. So we're above where we opened, and we're just kind of consolidating. If we do break above these 58s, maybe 60, yeah, I could see us get to some of these highs really quick. I'm relatively tempted to take a trade, a breakout trade to the north. But not great location. I would rather watch us, maybe have a pullback and then look for a continuation. That would be the trade I want to see. But we can very well just break through now. And I missed that trade. Anyway, let's move on. Take a look at crude oil. Crude oil, let's jump out to the hourly charts. Get it cleaned up. And that is super ugly, super messy. Last night, we were looking at this to become a higher low. And sure enough, that so far is what it's doing. We had a breakout up to, 69 and a third. Pulled back to around 67 and a half. Rallied. We're kind of just consolidating, finding some level of buyers. And so maybe we could also see a push in crude back up to 69. And then if we are able to get into a decent position, hold a runner and see if we could come up and even test 70 here on crude. But yeah, it's very hard because this is quite the sell-off, and this maybe even looking from it from a bearish perspective is we take this nice sell-off. We did pull back to this resistance. This is resistance. And so, yeah, it's realistic to see if we could have a continuation back down still. But for now, the intermediate term is we're finding higher lows and we're finding higher highs on an hourly chart in Crude. And you can see it here. So hard to see, hard to tell. We're kind of in the middle. I don't like a short. I do not like a long here because we're right in the middle of this range. I'm going to say a little bit biased to the long side to maybe test 69 because we have had higher lows and higher highs on the intermediate. But the more dominant trend is, of course, down right now. So too indecisive, not enough things lining up for me in crude oil. Now let's take a look at gold, and then we could open up to some questions and yeah, go from there. Interesting area in gold. We could probably zoom out even a little bit more. Let's zoom out on an hourly chart or a daily chart. Daily chart on gold. What a bullish market, obviously. Very bullish, very bullish. We've had 2 days, a 2-day sell-off. Usually it hasn't been very deep of a sell-off. We did get some deep sell-offs July and August with some crazy volatility. Bull flag rally, we had a 2-day sell-off to a pullback here. Is this going to be something similar where we have a pullback or a sell-off? There was consolidation at this level before, just last week. So if we start to zoom in on an hourly chart, you could see that, right? There's a lot of consolidation. Pretty simple and straightforward. There was a lot of support there. We extended out. There's some nice support here as well. And so maybe some, good risk reward opportunities to the long side here in gold. I like getting in with the trend. I like getting in long with this market. We could very well see a deeper pullback. Maybe we see a pullback to 26.15. That can be realistic somewhere in this zone, a pullback. But yeah, just waiting for the market to tell us if it wants to reverse. I mean, you could see this is an hourly chart. That is a lot of buyers stepping in right around this 26.50 level. I would wait. I'd watch. Maybe we could make a higher low and then we look to break out. So maybe something like this is a pattern I like to see as a technical trader, is wait for another move down, wait for a higher low, and then play a breakout above, maybe this pivot, for example, or even some other pivot. Take a look at the NASDAQ. Let's take a look at the NASDAQ. I mean, it looks freaking bullish, guys. It's we got a little bit of a pullback there, huh? A little bit of a pullback. Yeah, that's actually an interesting. I'm gonna take a look at MNQ. What's my master plan, Randy? Manage risk. Manage risk. That's my master plan. So I'm going to jump. Now we're going to go at the 100 tick chart here. Let's see. Playing for a breakout. This is a 100 tick chart, so it's a little crazy, if you will. It doesn't look very great. I know it doesn't, so just bear with me. I'm going to go ahead and see if I can get filled for a couple of these micros. Is that not going to fill me? Come on. It might not fill me. Yeah, I'm gonna cancel that and wait. I didn't like the way that we were rejecting there for a moment. Let's wait and see. I think we might just break out here. Dang it. Yep, there it was. There it goes. Let's see if it will give us another opportunity. I missed it. Man, we got that little bit of a pullback consolidation and then the break. And of course, now I should have just marketed in. But that's okay. You guys seen what I was trying to do, right? Everyone's seen what I was trying to do. I just should have marketed in sometimes. Sometimes giving up a quarter point or a half a point is worth rather than just missing that one. This thing could pick up this could pick up a lot of momentum. We could be seeing these 70s really quick. It's the thought that counts. It's the thought that counts sometimes. I would much rather have the money in my pocket than the thought. All right. I need a drink and reset, and we could keep going through the markets and see if there's another opportunity. All right. Yeah, that was the move. A little quick 10-point banger. Anyway, when you miss it, it sometimes sucks. Yeah, just water. It's just water, guys. That's it. When you miss a trade, you just take a drink and move on to the next as we watch this baby just run without us. Yep. Yep. Nothing you could do there. What's the target on Nikkei or NQ? Higher. This thing's going higher so far. I mean, we're looking at these 270s as it just is blowing up without me. There it goes. So we just end the stream here. Oh man. What a move. What a move. Yeah. Yep. That's all, folks. Good night. We'll catch you tomorrow during fast markets. That's kind of how I feel right now after that one. The timing on that is insane. I mean, sometimes that's how it works, right? If you guys watched me trade, you guys see that I like to get in and out of the markets at, key support and resistance levels, and that's what you get sometimes. Yeah, let's take a look. How's the Nikkei looking? Is the Nikkei just following along? Yes, it is. Nikkei's just, wow, just as straight up. Nikkei's going straight up too. If we were just a little bit early, we would be in a good position. Look at that. I'm going to put this line back on there. Yeah, sometimes that's the worst feeling, right? Is having the trade go without you, but that's okay. You just wait, and you have to wait. You don't jump in. You don't FOMO out. It sucks. We could talk about it, right? It's okay to talk about it. It's okay to be frustrated, because I've been trading for, now it's over 14 years. I still get frustrated, everybody. I get frustrated. I get pissed off. I get all of the emotions, but there's nothing you could do, right? It's like spilt milk. You could be sad about it, and you just have to wait and move on and see if the market gives you another opportunity. Markets typically don't move like this, and the opportunity is not always that great. So, yeah, sometimes it's just you watch the markets every single day, and you don't get as nice of trades as what we've seen, but you have to wait. You have to be patient, because guess what? The market will eventually, show another trade. And so It's okay to be frustrated or upset. Just do not act upon it. Do not make any actions. Do not chase the market. Do not break your strategy, regardless of how upset you could be. Trust me. There's been a lot of times where it's very easy and it's a slippery slope to just say, dang it, we're going to keep going up exactly where I wanted it to go. And just like Nikkei, right? So if we have the Nikkei, I said, man, this market could keep going. We could still get to 870. And then I just jump into a long here, and then the market sells off. And then you end up in a really bad position because the risk reward is no longer valid for me. Even though I could still be right and the market could get to like the level that I want, the risk reward is no longer there because I would love to have got in on the breakout, have a stop loss maybe, somewhere down here, and then that's a good 4-to-1 risk reward. But now if I was to buy here, the risk reward is no longer valid. And statistically, the positive expectancy that I'm used to will no longer be the positive expectancy. It'll now turn into a negative expectancy because I'm not getting the risk reward based off my win percentage. So that's unfortunate. Let's just wait. Another opportunity could very well show itself. It's not the end of the world. Let's take a look. Let's take a look at gold. We were in the middle of gold. Taking a look at the 5-minute chart. So remember gold, hourly chart was liking all this rejection up here, looking pretty bullish. A lot of buyers stepping in right around 26.50. We see lower highs and we're seeing lower lows, but we're starting to see the buyers. So if we zoom into a 5-minute chart, what does this look like? Let's kind of break this down a little bit. First thing I notice is a possibility of a double bottom, and there is maybe breadcrumbs, like a small indication, like, hey, we made a higher low, and we just made possibly a higher high, smaller, right? Even though it's smaller, it's starting to pick up a little bit. We failed to break down once, twice, and of course, the bigger trend is to the downside. Right, and there's trends inside trends, right? Where we looked at the daily gold is up, right? Daily gold is up, going straight into the right, and the hourly gold is down. We've been selling off for the past few days, but then the 5-minute, the trend is up, and so that's why I'm saying it's very easy to be paralysis by overanalysis. And I think this is a good example on the gold where we take a look. You could do it again. Let's do it. So daily, the trend is bullish. Then we zoom into an hourly. Maybe we're looking at it like this. Trend is bullish on the hourly chart. But then maybe you look at a 15-minute chart. Oh, well, the trend is bearish on the 15-minute chart. You could take a look at the 5-minute and say, okay, well, the trend is bearish on the 5-minute chart. Then you could zoom into the 1-minute chart and say, okay, well, now the trend is bullish, right? So stay consistent in the time frames that you use. I like staying on the 1 hour and then the 5-minute, and then I'll sometimes zoom into like the 100 tick or a smaller time frame for the execution. But your overall analysis on trend, direction, and the direction that you want to trade needs to be consistent. You could always trick yourself into seeing the market how you feel like you want to see the market. Have a look at NQ. Is you guys wanting me to stick with NQ, huh? You guys like it. What was I if you guys, everybody in here, what I typically notice is we start to see traders coming in. We get at about 1,500 near the middle of the stream or so forth. I always recommend joining on time. So join on time. If you missed it, you could start at the very beginning because I do the analysis. NASDAQ, crude oil, Nikkei, gold. And if you miss something, just rewatch it and then ask questions. So yeah, Nikkei, I went through that. Nothing's really moving. Anyway. Or the NASDAQ will bounce back and forth. And let's get to some questions now. We're getting a little bit of a pullback on the Nikkei. Let's see if something can set up. I want to see something. All right, let's get to this. Can you teach me about trailing stops? I've talked about them a little bit. Maybe we could discuss it when the markets settle down and maybe near the end of class. So just remind me, we talk about trailing stops relatively often here. What's your thoughts on mechanical trading? Same contract size, same take profit, same stop loss. Segi, I'll talk about that as well near the end with trailing stop because I feel like they can go hand in hand. So remind me on those two questions a little bit later. What about the port strike? Yes, the port strike is going to, that's tonight at midnight, right? Is there any news? Is there any news on the port strike? I've been checking with my team and a lot of my contacts, and I've only had a couple shipments get delayed because of the port strike, and that was out of the port on the East Coast. California is good. All of the shipments I work with are good. Everything's running smooth in the ports on the West Coast. So it might not, I don't know. What is the news? Will the port strike cause the VIX to boom? I don't know. If it gets dramatic and it stays for longer than like a week, then yeah, maybe we can start seeing some craziness happen in the markets. As of now it's happening, apparently neither side wants to negotiate. Man, I could sit here and I could talk about the port strike and I have my own opinions. I have a lot of strong opinions from the economic side of this port strike. And I could sit here and talk and talk and talk. MP and I talked about it a little bit today during fast markets because I've spent a lot of time working in the logistics and supply chain industry. Let's hear it. No, I'm not going to give my strong opinions because not everybody will like them, and we're going to be talking about the markets. And I know this is a class about markets and trading. And the port strike can make a difference. However, we are traders. We trade what the market does, not what we think it's going to do. Because I could have my opinion on what the market should do based off of the port strike, but the market could act completely different than my opinion. So it's always better to just trade what we see in front of us and not trade what we think is going to happen for the day-to-day trades. Lucky Cat, I will say that. You are 100% Lucky Cat. What's frustrating is how behind our infrastructure and ports are. If you guys ever visit China and go to the major ports in China, you will see how efficient and how advanced those ports are compared to the ones here in the United States. It's so automated and so efficient compared to what we have here. It's absolutely like unfathomable, or it's just mind-boggling how far ahead the ports in China are compared to the ones where they're striking here in the United States. And part of the strike is they don't want automation. And to me, that's just why. It's absolutely insane to me why they're striking, because they don't want automation. Automation and innovation is what brings us to the next level. It will reduce the costs and it helps. But yeah, I'm not going to get into it because you guys could tell I'm very passionate about this. Yeah, automation is a good thing when done correctly. Anyway, that being said, let's get back to the markets, guys. Yeah. You guys, that's where I would get on rants. You talk about me on rants. That would get me into the rants. Let's keep going. Let's take a look at the NASDAQ. Yeah. I'm still looking for a breakout to the long side, looking for areas of opportunity to buy the dip. Buy the dip. Today was pretty good. Let's watch and see. What news? We do have news. Let's take a look at the news. That's something we always have to look here. Take a news. Today is the 30th. We have Japanese PMI, Australian retail sales, Australian, some major events. Let's go through and look at this. Major ones here in the U.S. tomorrow during fast markets that we're going to be watching. We have the manufacturing PMI, and of course the U.S. JOLTS job openings, and then the ISM manufacturing. So we're going to see some, and on top of that, sprinkle in a whole bunch of Fed speakers. So more volatility to come tomorrow. And then it looks like we even do have bank, just lots of speakers. And then, man, all week we have a lot of speakers throughout the markets. Maybe some more volatility coming tomorrow. Like to see it. Eyes in the market. We did get a little bit of a pullback here on the Nikkei. Is this enough of a pullback to buy? Maybe. I'd like to see us pull back to maybe this level. Somewhere in this zone is where I would like it. I'd like to see it 38 below 600s. Below 600s. We'll keep an eye on these markets. While we wait, let's get to some more questions. Ooh, it is 8:02 p.m. Let's take a look at gold. See if we're seeing a spike in gold. Typically, we see a spike in volatility right around 8 p.m. Central. Not much is happening in gold. Not much of a movement anyway. You can see how we immediately reject these 56s and starting to bounce off that. Not a lot of volatility. Not a lot of volatility in gold. That's just a 1 minute chart. That's just a 1 minute chart. I'm watching the Nikkei. I'm going to pay attention to where the volatility is, and that's right now the Nikkei and the NASDAQ. Right now, it looks like that was the opportunity so far. You can see that we hesitated right there on our way up. On our way up, there was a little bit of hesitation right at those 630s, 620s. Sold off back down, got to 615, and that was the buying opportunity. Buying opportunity missed so far on the Nikkei. Let's take a look at the NASDAQ. NASDAQ, good looking bull flag. This is a bullish flag, right? Very simple, very technical pattern. Bull flag, no matter how you want to look at that. Are we going to see something very similar again, where we see a breakout to the long side to come and test this high up towards 86, up to 86? I'm not sure. We'll watch this one as well tonight. NQ is flagging nicely, building energy. Yeah, let's see if we have this continuation. Let's see if we get this continuation, break through this flagging pattern to the long side. Yeah, I think this isn't something to be said. You love how the NQ is making it up from last week. That's how the markets are. Sometimes it's not about, who makes the most money or who's making more money in the markets or who's even making money. A lot of times it's better to just who's left, right? That's usually the better question to ask yourself is who's left. It's a matter about who's being patient, because markets will go through small cycles. We've seen last week. We've seen the week before that with rollover and choppiness, and it's not even fun to trade. It's very difficult. And then you start to see better and cleaner moves. And so I'm not joking, Wizard, on who's left, where you see traders just go through their accounts. The people who are more patient, the traders who are more patient, who can manage money, scale down, wait, maybe they get chopped up a bit. And then when the markets do start to have better opportunities, like we've seen today, today was an amazing day for that. There was very great opportunities. We just seen another one tonight. Then take advantage of it, right? While the trading is good, you take advantage of it. And then you can, wait. And then once the markets become a mess again, reduce risk, manage risk, focus on that. The best loser wins 100%. It's like anything, right? The traders, the people in anything, on any aspect, and in any sport, the ones who are the most patient are the ones who tend to do the best. They wait until the market conditions meet their strategy, and then they will take advantage of it. It's just very hard to be patient. That's if you guys remember that document we had yesterday, it's the same thing, right? That document I was talking about, was it yesterday? I even showed it today during fast markets as well. Let me see if I could find it. Let's see if I could find that document. Let's see. Yeah, we were just talking about what makes, what gives you an edge, right? And I think 90% of an edge of a trader comes from being able to wait, being patient. You can see it here. Patience, not over trading, better setups, finding risk reward, better location. I mean, it's the same thing, right? Discipline, control, greed, having a plan, risk management. I didn't go through, and we ran out of time because I could spend hours and hours on this. And it's the same thing, right? Is traders who wait for the better setups do better. And I love comparing trading to poker because it's the same in poker, right? You don't put your money at risk having a very bad hand. You wait for good opportunities. You wait for that good risk reward. You wait for that positive expectancy, and then you take the risk then. Austin, how many trades do you would you average a day? Realistically, true, honest trades during slow markets, maybe one or two. During my slow markets. But then during the New York session, maybe 3 or 4. And it depends on what the market's doing. I could get it in and out. Okay, I need to watch what I say. But I can get in and out of the market multiple times really quick. And I could still consider that one trade. One setup, I should say. So less about the trades and more about the setups. And I think there was a couple examples today in the NASDAQ. Yeah, you guys know where I was going with that. You always have to catch and watch what you say when you're on YouTube because it's recorded. It's in the YouTube. But for example, if you're looking to buy a pullback, and today, here's an example. We had a rally off of the low, and then we started to pull back. And if we were buying this, sometimes I would, right? I would, maybe look to buy here. I would get stopped out. Then maybe I would buy here. And then I would get stopped out again. And then I would buy here. And I consider this one setup. One setup. Even though it might show as like 3 or 4 trades because I'm getting in, getting out, getting in, getting out. It's still one setup. So I'll say maybe 2 or 3 good setups every day for me during the New York session, but I might get chopped up a few times. I might get in and out a few times as well, depending on the market. Very rarely does it happen like on Power Hour, right? Power Hour was, amazing. You guys know this is what I look for. This is such a beautiful trade. We had that huge move off the lows. We got the pullback. We got the consolidation. And just like Muhammad, if I was on Power Hour, it would have been the same thing. It was such a beautiful, clean trade setup. I was in the YouTube chat saying I love this trade. When we did break, it was just straight up. That doesn't happen very often. And it's a beautiful thing when it does. A lot of times, more often than not, you get caught in this chop, getting in and getting stopped out and, hesitating and getting scratched, and then it leaves without you. Very rarely does it just go straight up like that. It was beautiful. Anyway, let's get back to the markets. We're starting to break up. Up, straight up. Here we go. Let's see if we can make that run into these 80s. Looking for 86s. So here's a nice, beautiful technical pattern. We broke out, right? This is something we always watch for. Love to see that Mohammed's watching for this as well. A retest and then the continuation. You can see, obviously, nothing's as clean as what you might look. It probably looks a little bit better on... I could make this thing look really nice. Watch. We go to micros. We go to a 100 tick chart. And then you can make this look a lot better, a lot more clean. So you can see that price action. All price action is the same. It's fractal, and so you could see it. And the play would be a break up into these 84s. Where do we say 84s? Maybe 86. Yeah, so that's the play. We could watch this here. We could watch it. Let's see if we get that clean break to the long side. And then we could jump over to Nikkei, see if there's anything else. Yeah, Nikkei was that pullback. Anyway, so far so good. Let's talk a slow markets trade because I see something setting up. And I want to trade this. This is a concept that I'm going to leave overnight. So let's talk about this. This is a slow markets concept. This is what I love to trade. This is where I typically am the most profitable and where I learned how to trade. So I will always say that this is not a signals class for educational purposes only. However, I'm okay with everyone following along to practice the mechanics. Do it in a demo account. Just like in a school where you would follow along when the teacher does a problem or does something on the whiteboard and you take notes, it's very beneficial to get used to the mechanics. And so what I am going to be looking for and what I'm going to be doing is looking for a breakout trade. And what I like to do is look for an area of support and resistance. This is a nice resistance zone. And so to me, the trade would be a break above this. Let me jump over to micros because I want to set this and manage my trade efficiently. And so this is going to be the resistance that I'm looking at. There's a lot of support and resistance in this zone, even going all the way back up through there. And so what I'm looking for is a breakout. So if we break out, I'm going to look for this market to continue up towards these 360s, maybe 380s. That is going to be the idea, the concept, and the setup going into tonight, the London session, and maybe even pre-market during the New York session. So what I like to do is put a buy stop. This is purely for example right now, is a buy stop at, let's just say, at the breakout. So we could say 297 and a quarter. So this is on the hourly. I'm just setting it up. This is like a rough draft. You set it up. We get the rough draft here, and then we'll fine tune it and come up with the finished draft on a smaller time frame. So buy stop looks good there. My stop loss would be probably right below this previous pivot, so 208. And then take profit looks good up near the top of this area. So get in 297. Looks like we're going to be looking to make about 80 points. We're going to be risking about 80 points, 90 points. So right around a 1-to-1 risk reward. And so after I get this set up, the first thing I do is we'll jump down to, yeah, I'm actually doing this in my live account, if you guys didn't notice. Jump down into a 5-minute chart, and then I fine tune it. So I jump to a 5-minute chart and I say, okay, what's a more realistic take profit? I'll take a look at the take profit and we can say, okay, well, we see this one candle right here. That seems to be relatively reasonable. So I'm just going to do, for this example, 375, 375, 375, and then I'll take a look at my stop loss. Is that a good stop loss? Should I have it tighter? Do I have it smaller? I do like 210 as a stop loss just because it's a round number and we're doing this for an example. So far that would be the trade. And then we do the math. Okay, let's do the math. I'm going to take my entry at a round number just because I'm doing this live and I want to do the math easily in front of everybody first. Come on. Maybe. Let's go 95. This is purely for math. Oh, come on. I'm going to do it like this. I'm going to cheat. We're going to stop by 95. Okay, so this is where basically, that's a decent setup. Let's go ahead and do the math. Now, this is using 1 micro. I'm okay risking $375 to $400 per trade. So 1 micro, I'm going to be risking, it looks like, so from 295 to 210. I'm risking 85 points. 85 points in terms of my risk. So 85 points times $2 per point, because this is a micro, I'm risking $170 per contract. And since I'm okay with risking 375 to 400, I'm okay with doing, right now about 2 contracts. So I'm okay with doing 2 contracts. Let's go ahead. I'm going to put a second contract on here. So 2 contracts, I'm risking $340 on this trade. My take profit is going to be, for this example, 375. 375 minus 295, 80 points. So 80 points times 4, so 320. That's a little less ideal than a 1-to-1. It's really close to a 1-to-1. However, this is going to be my first take profit, and then I'm going to leave a runner on because I'm okay with this. I like this, where it's as close to a 1-to-1 as you can get, risking 85 points to make 80. However, I'm going to have 1 as a runner. So this is going to be 1 take profit, and then I'm going to leave 1 contract on for a runner that maybe I wake up and we're up at 20,500. That's very possible. It has happened. It can happen. And I'm okay with leaving a runner, because if we do break up and hit this take profit, I'm in a really good position, and I might decide to hold a runner on throughout the New York session. So that is the idea. And now the way that you would set this up is you'll go into the settings and you'll do the risk. The risk is going to be, what is this? The take profit is 320, and the risk is 85 points times 4 is 340. Let me make sure I did that right again. Yeah, so then automatically apply risk and profit new trades. Click on save. Okay, so it's saved. Go ahead and hit this. Let's go ahead and click on that. Clear this, and now we will set this. We will set this up, and we will put it at, we said 295, right? Oh, come on. Buy stop 2. Okay, so now it is set up. This is how I like to set up my slow markets trades. I showed you how to do it. Feel free to go through on a practice account. Like I said, this is not a signals class. And so what this will do is, what's going to happen is I'm going to go to bed and I'm going to leave this on. And market's either going to sell off and I don't even get into a trade. Oh, well. If it goes sideways, I don't get triggered into a trade. I only get triggered into a trade if we rally up and if we hit 295. Once we hit 295, my stop loss will be activated at the point. What would we say? It was 210. And then my take profit would be activated at, what was it? What was it? 3 something? It was 375, I think. Anyway, that is how I like to set it up. And now once I get triggered in, 3 things could happen, right? It either goes up and hits my take profit. Great. It was a great trade. I woke up with $320. It goes down and it hits my stop loss. Dang it. I lost $340. My risk is defined. Or we're somewhere in between and I wake up and I'm still in this trade and we're somewhere in between, and then I can make that decision on how to manage it. Do I just close it out? Do I move my stop loss? Do I just let it go? And then I can make that decision from there. So that's it. This is a great example, and you could do the same thing to the downside, right? Maybe you're looking for the exact opposite. Instead of buying it, you do the same thing for a short, right? Maybe you do a sell stop there, right? So maybe you could do the exact same thing, the same idea you set up to short this. And that's saying if we do break down and we break below this, then I'm going to look for the market to continue, maybe down to 138. Like, that is an option. Or another option would be a limit order. Maybe you want the market to sell off. Maybe if we get back to this 227 level, sometimes I do this. I'm going to cancel this just so nobody gets confused. So maybe sometimes I do this as well, is we want to put a buy limit, okay? Buy limit down here. This is something I was thinking about doing, is putting a buy limit down at 230 and somewhere near this level, and then putting my stop loss maybe towards 165 and a take profit up here. This has a good 2-to-1 risk reward, maybe even lower. I mean, you could even make an argument to do a buy limit somewhere down in these lows. Let me go do this. This could also be something, if we do start to sell off, is a buy limit down here near 160s, that if for some reason we do sell off, we want to get into a long, and that will allow us to have a nice stop loss. Maybe we can even argue for a stop loss to 109, and then keeping the take profit the same, right? And so you could see there are many ways that you can set up these trades overnight, limit orders, stop orders, to put a pending order. But the most important thing is practice. Practice in a demo account, practice in a simulated environment until you feel comfortable. Practice small. Get used to it. Get used to seeing how the market reacts overnight. All right. Yeah, let me go ahead. I'm going to put that trade back on because that is something I want to take. There we go. Well, how was that? Let's get to these questions. You probably have a ton of questions, huh? No trolls in the chat. I thought for sure there'll be a couple of trolls out tonight. Why do we have so many Fed speakers? Is that the way they get the market to move in any direction? If I knew the exact reason why Fed speakers just decide to talk and when they do, I mean, they love to talk. The Fed speakers love to talk. Dakota, do you find before you start making money, you changed in life? Were you a different person from the unprofitable version of you? Chris, that is an interesting question. Have I changed who I am since I started becoming profitable? I don't know. That's pretty deep. I cannot give. I would say 100. I think so, because I've been trading for 14 years in a couple months. So 100. I do think I've changed. I'm curious. I don't know. That is a interesting, deep question. That I do not have a easy answer. I would say yes. I think, if anything, trading has caused me to become more disciplined and patient in my life. Because trading is not just, I want to practice discipline and patience in trading only. You have to keep practicing it. You practice it in your day-to-day activities, whether you're waking up and doing so it's not just I'm going to be only patient and disciplined in my trading. You have to do that outside of your life as well. So you have to do these things just as much as you want to do it in trading. You have to do that in your personal life, and that's the only way to do it. If not, I've seen sometimes where I start to slack and get lazy. For example, lately I've been struggling with energy drinks, and I've wanted to quit energy drinks, and it's freaking hard. And sometimes I've noticed that the same what do we call it, bad habit of not wanting to stop doing something. I've seen that leak into my trading every once in a while. Like, man, I keep buying the market and we keep selling off. As much as maybe we should just stop looking for longs and start looking for shorts. Like, well, it's the same with energy drinks for me. Like, I want to stop quitting energy drinks, but then when I wake up in the morning and I'm freaking tired, It's hard to. It's very hard. No, I was drinking. I started drinking bucked up energy drinks like a year ago, and yeah, it's just ugh. It's very bad. Then you go to the dentist, and the dentist says you got to stop drinking energy drinks because acidic drinks can really be bad for your teeth. Man, here we go. Is this going to trigger me in? Maybe I let this trigger me in, and you guys could see this place the orders. So yeah, I'm gonna let this trigger me in if it does, and then you guys could see the orders be placed automatically. Let's see it. This will be a good test. I've done it before. What a spike in volatility. There's another good example, right? Rally, bullish flag, rally, bullish flag, rally. That was 25 points. Man, I take a look at that. If that's not accurate. Ooh, big 100 contract. Wait, these are on micros. Never mind. These are micros, not minis. I can see there's a 100 contract order that just came in. Interesting. What's Nikkei? Did Nikkei hit that level? See, that was the pullback. That was the pullback on Nikkei. Man, that would have been a nice trade on Nikkei right there. Pullback. Even if we got in like this. Yeah. Anyway, how's that for an order? It almost triggered me in. Well, that's the importance of having your orders at the beauty of technical analysis. Take a look at that. See, technical analysis. Sometimes it's beautiful when it works out. It really is beautiful. For whatever reason, it doesn't always work out as nice as this, but when it does, it works. Yeah, maybe there was an argument to be made to buy right there. Anyway, okay. Yeah, what was I saying? I got really sidetracked and then the market moved. Yeah. Anyway, get me back on track, everybody. What was I talking about? What would you say to anyone who's at the break-even stage? What can you say and what worked for you? I'm not sure. Oh, the dentist. Yeah. Screw the dentists. Yeah, sometimes you don't. If you don't change, eventually you're forced to change. That's the reality. And I think that's what happened to me. Was I have a bad habit of drinking energy drinks, and I'm trying to do it, and then the dentist tells you, and now it's just like I'm forced to change, right? Or I suffer the consequences, and it's going to be the same thing, and it's been the same thing in trading from my experience, is you keep doing the same hard-headed things, and you get the same results until the market forces you to change. And it's a hard thing to do. Being patient, disciplined. Look at the daily. Look at the daily. Yeah, we got that 3-bar reversal on the daily. All right, we're going to go to a 1 minute chart, and you guys could watch this get triggered. So you can see. Let's see how the stop loss and the take profit look. Isn't that the truth? Yeah, you're on your 4th XFA. It's difficult. All right. What's going on? Did I not click this? Oh, there it is. Ooh, that's way off. 640. I got to make a note on that one. It's doubled it because it's 2 contracts. Bracket orders. Feeling the heat. Let's see. 1,000? Yeah, put those on there. Okay, I know it works on the combines and the XFAs. I'm going to take a note of that one. Interesting. Well, I'm going to manually adjust it. Manually adjusting this one. Where's the stop loss? I want my stop to be there. I want my take profits. That's why practice, everyone. Practice. Be right there. Jump into the 1 minute. Are we just blowing through this? Easy money. Let's go through. Oh, I'm going to get out of 1. Just get me out of 1. There we go. 340, 309. That's better. That's better. Okay. Man, what a move. What a move tonight. Is the Nikkei moving as well? It's slow. It's like molasses. Let's take a look at gold. Gold's bouncing. NQ is just going. Holding these 300s. 302. I might just get out and reset this trade up. I wanted this to trigger during the London session, not right now. Yeah, I'm out. I don't like it triggering right now. This is purely I can't explain this, what I just did. Experience maybe. I don't like that we broke out right now because it's the Asian session and we didn't coil, we didn't have any pullback, and we didn't consolidate. I wanted us to consolidate a lot more and was kind of having this breakout during the London session or when I go to bed. I just don't like that we already broke out right now. I'm going to wait. Yeah, I would have much rather us consolidated before we broke out. So that's just me making a decision. We're going to see if that was the right decision or the wrong decision. But I'm making that decision right now. I didn't like that we broke out already. To me, it was just too soon. I wanted to have that break maybe during the London session while I was sleeping. I don't want to get too far in depth, but yeah, I didn't like that. I did not like that at all. Much rather wait and do a setup. Now I'm actually even more inclined to do something like this and just put a buy limit right here. Do something like that. That is what I'm more inclined to do, is a buy limit and then having my stop right there and then keeping my take profit where it was. So I'm actually more inclined for this type of a trade now. Yeah, I like this trade a lot better. So let's set this trade up. Heck with it. Might as well. Why not? So buy limit, I'm going to say 240. Let's just do this. 240 seems like a great place. Stop loss, I'm fine with risking about 300. I'm going to leave a little bit more room. I like to have room. I mean, because there's plenty of times where we've ran liquidity and then turned around. So I like having more room. 295. Let's see. I'll be risking about 45 points. So 45 points worth of risk. And then the take profit would be about the same. Take profit doesn't change, obviously. So the take profit is going to be at 75. Come on, let's get this set up right better. Okay, there we go. So if I'm going to be risking 45 points at $2 per point. Let me do the calculations real quick. I don't want to do it in my head. Yeah, 45 times 2, it's $90 per contract. So I'd be risking $90 per contract on this one. So I'm actually going to be okay with doing, I'm going to be okay with doing, I'm going to be okay with doing a full mini. I might be okay with doing a full mini. I'm going to go ahead and do, I'm going to do 10 micros. 10 micros, then that will give me the flexibility to scale out as needed. So let's go ahead and make sure that the risk's on there. And this is, they do this. This one's based off of per contract. Let me just make sure that this is correct. 90, we're going to save that one. So this is a per contract risk, it looks like. And so if my take profit's going to be 75, I'm going to be looking to make, what's the profit? So risking 45 to make 240 135. So 270. So that's a much better risk reward. So risk 90 to make 270 would be the setup. Okay. I'm going to make sure that these brackets are going to work okay. Let's do this. I'm going to run a test. Yeah, there we go. There we go. 90, 70. I shorted that. And now I'm going to try one more test. Yep. Okay, there we go. Now it's set up good. Because when I double it, it doubles. Okay. Boom. That is what I want to be. And so for this, I'm going to get into 10 at micros, making sure it's, there we go. Now that's going to be accurate and it should work. Okay, so what this is going to say now, just so everyone we can be on the same page, is I'm going to get triggered in. If I get triggered in a buy, I will now be long 10 micros. My stop loss is going to be 195. Going to be risking 10 micros, 45 points per micro is going to be $90 per contracts times 10. Ooh, that's going to be $900. So I'm going to actually limit that to the 50, right? I want half that. There we go. Now we're good. Risking 400. So I'm risking $400 to make about 1,300. So risking 400 to make about 1,300, and then the 5 contracts will allow me to leave a couple of runners tomorrow if the NASDAQ does decide to have this trade play out. There we go. Now keep in mind, everybody, this is a low probability trade. Trades like this is not a breakout trade. Breakout trades, I have a higher win percentage on when we break out because the market's moving in my direction. Buy limit trades is, I have a lower win percentage on them. It's like 30% win rate, but I love to do these trades because I get great risk rewards. The risk rewards on these trades are just absolutely amazing. Where you can see right now it's what? Risking 45 to make, what's the risk reward on this? Oh man, lots of this public math tonight. So the risk reward on this is going to be 135. So is it 6 to 1? A 3 to 1. That's 3 to 1 on the money. That's exactly 3 to 1. Yeah, there's no, public math. Yeah, that's exactly a 3 to 1 trade. So a 3 to 1 trade, tell me, how often do you need to be right to be profitable on a 3 to 1 trade? Not very, right? 30% is still profitable. So anyway, so what that means, 7 out of 10 times I will lose this trade. 7 out of 10 times I will lose this trade. The 3 out of 10 times, I'm still going to have a positive expectancy. So that is the beauty of There's a risk reward tool. Where's that risk reward tool? If somebody says there's a risk reward tool, is there? Direct me where it's at if there is one. I'm curious. Just popping in, Lions up by 14, asking to do it, but use. Hey, you guys could use a calculator. I'm running a stream, okay? Why this level? The reason why I like this level is take a look at the support and resistance here, and this is right near where we opened. So this is right near the open of the 5 p.m. Central. And so a lot of times I do like it. Sometimes the market does revert right back down to where we opened, and then it has that continuation. Is right there, your mouse was just on it. Is this the risk reward tool? No. Above the brush. All right, guys, I'm just you guys are probably screaming at your screen saying it's right there. It's right there. 5th from the top. Long position. I found it. Don't worry, everyone. Is this it? Nice. Okay. So, yeah, 3-1, right on the money. Interesting. I'm going to have to play around with that for a little bit. Yes. I'd love to have this risk 25%. Ooh, here we go. This is interesting. Account size, lot size, risk. Interesting. I'm going to have to play around. That is an interesting, very useful tool, to be honest. This is a very useful tool. I'll be curious. I'll have to get used to that and see how it works. You could even apply templates. So I'm guessing I'm risking, this is saying, I lots 5 to risk reward. So this is saying I'm risking 750 to make 1700. Yeah, I'm going to have to take a class and learn about this. Man, there's so many tools. There's really so many tools available for us as traders. It's very easy to get overwhelmed. Very easy to get overwhelmed by how many tools and resources there are for us as traders. It is. I think I'm reading that right. It's saying I'm risking 750. No? I don't know. Whatever. No, we need a class. Yeah, I'm going to talk to Coach Robert. I'm going to talk to somebody, see if we could get a YouTube video on how to use this. This is pretty dang cool. Maybe I just take the time, learn myself, and I do the video. So I'm going to leave this trade on. This is a trade that I like. Yeah, good risk reward. Odds are I'm going to lose this, right? Only going to make this about 33% of the time. 7 out of 10 times I'm going to lose this trade. But I think this is a good setup. You know what? Odds are maybe we just keep going up. And tomorrow we're up near my target. And then I said I should have just kept my buy stop in and got in on my original trade idea. Anyway, that being said, let's open it up to a few more questions. And then, yeah, we're going to call it a night. Monday night is already over. And markets have been moving. I like this trade setup. Cost me $9 to experience that one. Is Nikkei continuing to push? Not really. Let's take a look at gold. Make a run for around the markets just to see how everything's doing. Interesting spot here for gold. Interesting spot here for gold if we're going to break out or if we're going to find resistance. So this is an interesting level, an interesting decision zone for gold as well. Okay. Thanks, Jay Stinger. Last more questions, and we will go. What's the difference between a stop order and a limit order? A stop gets you in as the market's going in that direction. A limit order gets you in. Google it. That's a very straightforward question. What is the difference between a stop and a buy stop? Wait, stop order and a limit order. Not sure what you guys are referring to. Good answer. Ooh, okay. Yes. Good question. Let's finish it off with this question. I said I was going to talk about trailing stops, and I think I need to talk about trailing stops. Whether using a manual, like a set stop loss, or a trailing stop. So let's talk about this one. I want to talk about the order I have set up. So the way I have this trade set up is going to be something like, where was it, 95, like this. This is my stop loss. I'm going to make this red for this example. And this would be my stop loss. And the way I have it set up right now is purely, once I get triggered in, my stop loss is not going to move, which is good, right? I like this for my slow markets trades because it gives me a true risk reward and true statistics. It's either going to hit my take profit or my stop loss on this type of a trade. Now, if I had the ability to trail this, I 100% would, because if we continue to break out, I want to move my stop with a reason. My stop loss needs to be at points and areas that will invalidate my trade. Right now, say 95 is my trade of invalidation. If this market sells off, makes a pivot, another higher low, right? So this was a low. This is my stop of invalidation. And then it continues to rally. I will then want my stop loss to be below that pivot, because that pivot makes for a good area to have an invalid trade if the market does decide to turn around and then break through that pivot. Then my trade is no longer validated. So I love to trail my stop loss because of this. However, my overnight trades, I don't, just because I like the true risk reward and I'm not awake to trail my stop. I'm sleeping. But this is how I like to do it. And you can imagine, you could just do this on any time frame, whether this is, I'm doing this on a 5-minute chart. You could do this on an extreme example, an hourly chart, okay? If you are trading on a longer term, say you happen to get in on the breakout over here, right? You would have your stop loss below the pivots. And then let's just say this is my entry. This is on a daily chart, right? This is my entry, my stop loss. We start to break out. Then you'll want to move your stop loss there. Maybe you want to move your stop loss below this one. And now today gave you a great area to move your stop loss for a longer term. This is what I do on higher. You can't do this at Topstep because we're not holding trades for overnight and throughout weeks. But the idea is the same. It doesn't matter the time frame, right? This is on an hourly chart. This is looking to hold a trade for weeks, and that's how I would trail it. However, if I'm looking to scalp, I'll jump into a 100 tick chart. Say I'm scalping during the New York session. I'm on the 100 tick chart, and say I'm in long right here. My stop loss would then be, say this is my long position. Say I would trail it below this stop, this one, and then stop loss there. And then once we do break below one of these pivots, it's no longer a valid trade. And then once we break below that pivot, it's no longer valid, in my opinion, and in the way that my strategy lays out. Now, some traders might have the VWAP, right? So maybe there is the a trader with a VWAP and they trail there, and I'm going to just show that for example. VWAP. Say there's a VWAP, and then here's your stop loss. Maybe you want to just trail your stop so far behind the VWAP, and now we are here. The VWAP is right there, and so maybe you want to have your stop loss, say X amount of points below the VWAP. Say I want to be 5 points below the VWAP, and boom. And then as the VWAP moves, your stop loss moves. And then if the VWAP does start to sell off, then your stop loss stays there. So I've seen so many traders do so many different things. Like I said, there's almost an infinite amount of ways that you could trade and manage a position. It's just finding one, getting it as simple as you can, and then staying consistent. And then you could adjust and you can manage. And yeah, that's how you trade. Do you think NQ or ES follows technicals better? ES follows technicals better, in my opinion. Richard Harris, I don't know. Maybe because it's simple. I have no idea. What a market rally, everybody. And just to think, I was trying to buy it right here. Sometimes you just miss them, right? Sometimes you just freaking miss them. Oh, what a day. I think that's where I'm going to be leaving it. Now remember, everybody, if you guys missed it, take a look at the chat. There's a link in the chat. One thing I do love that Topstep's doing is passing a trading combine on air with TopstepTV. Stanley's been on. That was great to see. So if you want to join TopstepTV and maybe trade with your trading combine and try and pass it, there is the link. It's been fun. It's been nice. I've really enjoyed it. And I think it really shows and encapsulates what Topstep is really about, and why I'm staying with Topstep is because it's truly finding ways to help traders become consistent and eventually make it into a live account. Because that's the goal. Become better and make it to a live account and continue to improve. And that continues to show it. And I try and explain it every single night. I see it every single day on TopstepTV. And I'm going to be on TopstepTV tomorrow morning during fast markets. We'll see. We'll see if we can continue to do good. And let's see if these markets continue to treat us good. Until then, take care. And I will see you guys tomorrow morning, if not tomorrow night.